Thanks for joining us today. Hello and welcome to Business Daily. I'm Jaein in Seoul. Let's get started with a look at today's highlights. The government plans to tighten mortgage rules for multiple homeowners as part of efforts to curb the country's ever-rising household debt. Is the era of low interest rates coming to an end? Major central banks around the world, including the Bank of Korea, may be on a path to further tighten their monetary policies. We sit down with an expert to talk about this. Korea's finance minister has unveiled new measures to curb the country's piling household debt, now sitting at some $1.2 trillion. It has long been seen as the main source of drag, weighing down on the local economy's recovery pace. Our Kim Ji-yeon starts us off.
The Ministry of Strategy and Finance has laid out its plans to curb Korea's mounting household debt with the aim of resolving risks to the local economy and establishing structural changes that discourage people from incurring debt. The ministry aims to slow down the accumulation of debt increases from the current annual two-digit growth to a single digit.
The household debt issue has long been cited as one of the biggest risks to the local economy by established foreign institutions, with the debt volume increasing at a fast pace compared to GDP, which is why we've come up with preemptive measures to quell rising debt.
Starting next year, the ministry will increase the scope of the debt-to-income ratio. They will also implement a debt service ratio, the ratio of household debt repayments to total disposable income, in order to hinder people with 2 or more mortgage loans from buying a house in areas of property speculation. Meanwhile, the government says it'll increase support for those already in risk of default. It says it'll gradually lower interest rates on private loans from the current maximum of 27.9% to 24% by February. It will also lower interest rates for overdue payment from the current 6 to 9% of the unpaid amount to 3 to 5% respectively. The government says it will work on personal credit recovery by lowering interest for responsible borrowers who are repaying their debt regularly, enabling them to be issued credit cards and apply for small loans. It will also expand the number of consulting centers from the current 39 to 42 by the end of this year. The government says it has a separate program to financially support self-employed people that are in risk of default with a fund worth more than $1 billion. It says it'll waive repayment of principal amounts for up to 3 years when borrowers have fallen into debt due to sudden unemployment or failure to run a business. Kim Ji-yeon, Business Daily.
And those measures come as banks are raising mortgage rates, perhaps signaling an end to the era of low interest rates. With the Bank of Korea expected to further tighten its monetary policy, those with loans under their names could start to feel a pinch in the coming months. Our Eunice Kim has the story.
Consensus among economists points to a Federal Reserve rate rise in December. A new range of 1 to 1.25% would place the upper bound in line with Korea's key rate. And signals from Bank of Korea's latest policy meeting has inspired talk of a possible rate increase by year's end. Domestic banks are getting ahead of the interest rate amendments. KB Hana Bank became the first lender to lift their guidance rate on mortgages to above 5%, as others' upward revisions close in on the psychologically significant figure. Average rates on credit loans have also risen so far this month, with KB Hana Bank again leading at more than 4.5%. Others all lie above 3%. If central banks in the U.S. and by extension Korea further tighten their years-long accommodative policies, the market rates will no doubt rise faster, translating to a heavier loan burden. Estimates by lawmaker Park Kwang-on's office says we'll see an added interest burden of 2.3 trillion won. That's about $2 billion annually for every quarter percentage point increase in the key rate. As more than half of the overall household debt burden is mortgages, the government is mulling over proactive measures to accommodate a soft landing for loan holders in order to prevent a shock to the real estate market. Eunice Kim, Business Daily.
Now, the parliamentary audit continues today with some 80 state agencies up for inspection. At the Health Committee, rival parties are at odds over the government's welfare policies, with the National Health Insurance Service coming under the microscope. The ruling party is likely to promote the benefits of the so-called Jaein Care, which calls for an expansion of health insurance coverage. Now, the opposition is expected to question how the government plans to finance such a costly healthcare policy. Over at the Industry Committee, lawmakers continue to butt heads over the government's nuclear-free energy policy. At the Oceans Committee, the Maritime Police is under inspection, with lawmakers clashing over what exactly transpired on the day when the Seoul ferry sank back in 2014. President Moon Jae-in has applauded a state commission's work of gauging public opinion on whether to resume construction of the Shingo 5 and 6 nuclear power plants. A 471-member jury had voted in favor last Friday of restarting construction of the 2 reactors after 3 months of debate and polling.
이번 공론화 과정은 우리 사회의 민주주의를 한층 성숙시키고 사회적 갈등 현안 해결의 새로운 모델을 만드는 계기가 되었다고 봅니다.
President Moon also addressed the 53% of responders in a survey who wanted to reduce the nation's dependency on nuclear energy. He said the government will continue to work on follow-up measures reflecting the will of the people and the State Commission's recommendations. According to the Blue House, the president and the cabinet have decided to publish a white paper of the public survey and develop a standardized manual for similar studies in the future. And President Moon Jae-in is set to hold a meeting with leaders of the country's labor unions to discuss his new economic and job-related policies. The meeting will be held at the presidential office of Cheongwade and will be attended by the Federation of Korean Trade Unions and the Korean Confederation of Trade Unions. It is hoped the gathering will provide insight on how workers view Moon's key economic policies, which range from reducing working hours to job creation and boosting income. He has vowed to create 810,000 public sector jobs during his term and hopes to raise the minimum wage to nearly $9. Prime Minister Lee Nak-yeon says Korea can relate to Greece's current hardships, as it also suffered during the Asian financial crisis in the late 90s. During a business forum in Greece on Monday, Prime Minister Lee said he was confident that Greece will soon recover from its debt crisis. Since 2010, Greece has received 3 bailouts, with the country's economy on the brink of collapse. The Greek Prime Minister showed great interest in how Korea recovered from the 1997 financial crisis in less than 4 years. He also emphasized that despite threats from North Korea and global trade protectionism, South Korea's economy remains strong and competitive. Now, we might soon be seeing an end to the country's monetary easing policy as central banks around the world also turn toward more tightening. In fact, there were dissenting calls within the BOK for a rate hike at its monthly policy meeting last week. So is Korea ready for such a change? Let's take a look.
There are growing expectations that the U.S. Federal Reserve will raise rates again before the year is up, while global central banks, including the ECB and the Bank of Japan, are also looking to shut their liquidity tap. And the Bank of Korea is no exception to this growing trend. Just last week, Central Bank Governor Lee Ju-yeol hinted at a potential rate hike, saying that, quote, conditions are getting ripe for the bank to end its accommodative policy. The Fed's hawkish tone has been adding extra pressure on the BOK, and experts say that Korea's central bank is likely to raise its lending rate throughout next year until it reaches 2%. The key rate currently stands at a record low of 1.25%, and a rate hike would be the first move of its kind in 6 years. But with Korea's massive household debt still weighing on the local economy, there are growing concerns that higher borrowing costs could weigh on already sluggish domestic consumption and lead to higher unemployment.
And to tell us more about this, Professor Judith Huck from the Catholic University of Korea joins us in the studio today. So good to see you.
Happy to be here.
So Korea's M2 money supply totaled $2.19 trillion in August, up 9.1% on year. Now, how effective do you think Bank of Korea's monetary easing policy was in boosting the local economy so far?
Okay, if you're talking about boosting the local economy, I think perhaps didn't do a very good job, but lessening the negative effect from the global financial crisis, I think it did a very good job. Studies, both inside and outside Korea, do show that monetary policy did have the effect of lessening the negative shocks from the global financial crisis. However, also, compared to what economists believed before the global financial crisis, we found that the monetary policy was perhaps not as strong as we thought it would be. There's two reasons, I think. One is we overestimated the underestimated the effect of flight to security.
Okay.
So when we had this long-term recession, people fled to U.S. dollars, U.S. government bonds internationally. Domestically, they fled to cash. So even though the central banks kept on pumping base money into the economy, it didn't make itself that much felt in the M2. So the monetary policy effect was lessened from that. And then the investment response was not as large as we thought it would be. And part of the reason for that is that because it was a long-term recession, even though the interest rate was very low, companies did not see that much need to have additional investment. So the power of the monetary policy was less than what we hoped for. So rather than boost the economy, I think it lessened the effect of the global financial crisis. So in that term, it was mixed, but we definitely needed the monetary policy.
But kind of going along with that, we did see some negative side effects from this, such as the overheating property market, as well as the mounting household debt.
Right, and because where it helped the economy, it went through not the investment channel, but I think through consumption channel. I think because a lot of people borrowed money to finance consumption, it lessened the negative shock from the financial crisis. It would have been successful, except the recession went on too long, so the household debt kept on piling. Now, whenever you have a low interest rate, there's a greater possibility of bubbles forming. And because the economy was not doing well, the bubble did not occur in the stock market, it occurred in the housing real estate market. And I think the problem was worse with Korea because of our jeonse system.
Right.
Now, nobody rents out housing for free. For jeonse system, the income for the house owners are the interest payments from the jeonse principal that the renters pay. But because the interest rate was so low, the jeonse principal went up so much that it was easier to use the jeonse principal to buy housing rather than rent it out. So I think that caused a lot of bubbles in the price market. It caused a lot of people to speculate in the housing market. So that was one of the problems created by the low interest rate. But that should not help. That should not keep us from raising the interest rate when it's necessary.
And also now we're expected to see the BOK gradually tighten its monetary policy from here on out, with a possible interest rate hike to be seen in the near future. Now, do you think the Korean economy is ready for this? I mean, is it stable enough to handle it?
Okay, looking at it purely from domestic point of view, I'm not sure if this is a good time to raise it. Consumption, it's rising, but it's still sluggish. We usually, when we had a rise in exports, as we had during most of this year, we expect incomes to go up and consumption and investment to follow. Wages and incomes haven't really gone up all that much, and investment performance has been mixed. So if you're just purely looking at the domestic economy, I'm not sure if it's a good time to raise the rates.
Now, we need to take into account the U.S. U.S. Fed's potential rate hike, which may come sometime within this year. Now, but then there are also potential risks of massive capital outflows.
So I think that's the main reason why we are considering raising the rates. If the U.S. Fed raises the rate and Korea keeps the rate at the current level, then United States policy rate will be higher than Korean rate, and that creates a possibility of a massive capital outflow. Now, we had that sort of reverse interest differential before when U.S. had the higher rate, but their situation is a bit different this time because there's a lot of uncertainty in the Korean economy, the largest of which is the North Korean problem, but also some of the, we have problems with KoreaUS FTA, we have problems with that retaliation. So I think Bank of Korea wants to play it safe and have Korean rate be slightly higher or at the same level as the U.S. rate. That means raising the interest rate before or around the time that the Fed raises its interest rate.
Now, the government has also announced its latest set of measures in trying to curb the massive household debt. So what are some of the ways that we could minimize negative side effects coming from possibly a higher interest rate here in Korea?
Okay, well, once those new regulations go into effect, it'll be harder to get additional loans, it'll be harder to get rollover. So I think there might be a lot of fall in consumption, a lot of fall in construction of housing units. So I think having expansionary fiscal policy we'll have to use the fiscal policy tool to get around that problem because, well, monetary policy, we just mentioned they're going to raise the interest rate because of the international problems.
Right.
So it only leaves the fiscal policy tool handy. Also, I think we will probably still see some rise in housing prices, even with the new policies, because I think the underlying fundamental problem is that there's a lot of people who want to live in the Seoul metropolitan area and the number of housing units are still low. So until we fix that fundamental problem, I think the rate of increase in prices may slow down, but we will probably still see the prices of housing still increase for a while.
All right. Thank you so much for your insight today.
Thank you.
And taking a look at the stock market action for today, Korean markets are continuing to go from strength to strength. At the closing bell, the Kospi reached yet another record high, inching up 0.02% to close at 2490.49. The tech-heavy Kosdaq finished 1.68% higher to finish at 687.21. On the foreign exchange counter, the Korean won strengthened against the greenback, ending at 1,127.41 to the dollar. With many earnings report yet to be released, expectations for Q3 remain strong. But a large sell-off overnight on Wall Street has tempered some of the excitement. A U.S. judge has ordered a retrial to determine how much Samsung Electronics should pay Apple for allegedly copying designs of the iPhone. According to Reuters on Monday, the retrial will focus on 3 Apple patents, such as its black rectangular front face and rounded corners. The new trial, called by a district judge in California late Sunday, comes 10 months after the U.S. Supreme Court overturned a $400 million verdict won by Apple. The smartphone makers have until Wednesday to decide on a date for the new trial, but according to reports, the two sides could reach a settlement outside of court. Washington's acting ambassador to Seoul says he's unsatisfied with the KoreaUS FTA, echoing U.S. President Donald Trump, adding that America's trade deficit with Korea cannot be overlooked. Here's our Connie Kim with more details.
The United States has repeated its discontent over its trade deficit with Korea, spiraling from the free trade agreement between the two allies known as KoreaUS FTA, and called on a more fair deal. Addressing the first ROK-U.S. Joint Public-Private Economic Forum on Monday, acting U.S. Ambassador to Korea Mark Napper said the serious trade deficit with Seoul has doubled since the 5-year-old bilateral trade pact took effect and that Washington is looking for ways to make the agreement into a more fair and balanced one. Napper labeled the trade deal a symbol of the two nations' economic link, but added that Washington cannot overlook the fact that deficit from the agreement has doubled since it went into effect in April 2012. U.S. President Trump had claimed the KoreaUS FTA, now in its fifth year, was horrible and left the U.S. destroyed, which led to meetings of a round of talks on Washington's demands for an amendment. It was on the second round of meetings and earlier this month that the two sides agreed to begin a process to amend the free trade deal. The U.S. has raised the idea of FTA revisions centering on the automobile industry, and the discussions will likely continue when the top negotiators from both Seoul and Washington meet next month during Trump's visit to Korea next month. Connie Kim, Business Daily.
The Chinese Ministry of Commerce has taken anti-dumping measures against Korean, Malaysian, and Thai imports of a plastic used for making precision parts. The Ministry of Commerce announced on Monday that imports from these three countries were being sold below the market price in China and were substantially damaging the domestic industry. Anti-dumping taxes ranging between 6% and 35% will be imposed on companies from these three countries. President Xi Jinping has solidified his position as China's most powerful leader since Mao Zedong, as the Communist Party of China's 19th Party Congress drew to a close on Tuesday. An ideology carrying Xi's name was added to the Communist Party's constitution. This has raised speculation the Chinese president could maintain his grip on power beyond his second five-year term. The CPC also unveiled a new Central Committee, which will elect members of the Politburo and the Standing Committee at its first plenary session tomorrow. Korea is continuing to attract many businesses in the manufacturing, logistics, and services sector, as Asia's fourth largest economy has grown into a sizable market. But while these foreign companies have seen huge profits from operating here in Korea, they're often criticized for being stingy in investments and donations. Our Lee Ju-young has more.
Walk down the streets of Korea, and it's become easy to spot foreign companies operating in the country, with a large number of multinational corporations regarding Korea as an important and attractive market. But many overseas businesses operating here are often criticized for channeling most of their earnings back home in the form of dividends and royalties while making very little social contributions. According to corporate tracker CEO Score, 101 foreign companies with sales of more than $80 million sent over half of their net profits back to their headquarters overseas. On the contrary, the average dividend payout of the top 121 Korean firms was only 29%.
Foreign firms receive a lot of benefits when doing business in Korea, but most of the profits are taken back home and they're very reluctant to make donations.
78 foreign companies that disclosed their records made a mere $53 million worth of donations last year, which is only around 0.06% of the $102 billion in sales they racked up in Korea. This is much lower than the donations made by 85 local companies. Add in the information of limited liability companies like Gucci, Chanel, and Apple that did not disclose records, and dividends paid overseas is expected to be much larger. In response, the National Assembly recently approved revisions to the external audit law aimed at preventing limited liability companies from keeping key corporate information secret. Lee Ju-young, Business Daily.
And that brings us to the end. Thanks for watching. We'll be back tomorrow with more at the same time, same place for your Business Daily. Until then, goodbye.